In the equity quadrant, a pretty quiet day. We're looking at the September S&P 500, and we didn't have that much of a change. The S&P struggled all day, the S&P futures, that is, struggled all day to get positive. Didn't really work out in toward the end of the day, but didn't have that bad of a day when you consider how many times we went above the flat line, below the flat line. We were up almost 0.4%, 38.40 on the high side of things. Down the low side of things, down a little bit more than 0.6%. The S&P over the last couple of days has been struggling with resistance at that 39.20 area. Didn't get anywhere near that today. And the S&P is down about 2.5% this week. Still 2 days to go, and 2.5% is not that much to make up after having a nice up week of 6.54% last week. Last week was the first up week in the previous 4. Now, we did have GDP weakness this morning in the data. Final Q1 GDP came in lower than the previous estimate, with prices higher than the previous estimate. Down 1.6% now is the final Q1, and the price index was actually higher than it was in the last estimate. So not the best overall view economically. But more important to that was the ECB forum today in terms of how it affected the equity markets. Global central bankers did not have too much positive to say on their respective economies. Powell says there's no guarantee he can tame inflation and spare jobs. That, of course, is Fed Chair Jerome Powell. He also vowed to prevent inflation from taking hold and said it can happen without a recession, but the task is getting tougher. That's likely why yields fell across the board, down 4 basis points in the 2-year, down 9 in the 5-year, down 10 in the 10-year, and down 8 in the 30-year. And the yield curve flattened a little bit as well. And Christine Lagarde talked about raising rates as well. So all of that weighed on equities all day and kind of fought off that positive finish in toward the end of the day for the S&P 500.